Hello and welcome everyone for another weekly market commentary with StashAway. With us again, our Chief Investment Officer, Freddy Lim. Today we have a very exciting topics, right? There were some changes and some new products were added to our app. So we're going to go into this in a few minutes. Before we do that, I wanted to share with you the next upcoming events that we have, both in Malaysia as well as in Singapore. In Singapore, on the 25th of November, we're going to have a live webinar. So if you've never been able to make it to any of our events in person, this is your chance to be able to do it from your home, or if you're still at work, you can join us live on the webinar, ask us any kind of question, because the topic is about inside the app and about StashAway as a company. So please feel free to attend this. As always, signing up is via our website, stashaway.sg/academy. Or Eventbrite, Facebook, wherever you find us, there will be a link to sign up as well. In addition to that, in Malaysia, we're going to have a how to plan for your retirement seminar. That is going to be on the 4th of December. Again, sign up is via Eventbrite, Facebook, and our Malaysia website, stashaway.my/academy. So hope to see as many as possible at both of those events and attend those events. And now we go up into some updates, right, Freddy? Let's talk about market, then we can talk about product. It's been, the news have been highlighted basically by trade, impeachment. Brexit is on the stove right now because there's not much to do until the election. But let's start with trade, right? Everyone thought 2 weeks ago we're really close to phase one deal. Still not quite there. Lots of jabs left and right from both sides.
Honestly, I'm bored about trade. What's more interesting is this morning the U.S. Senate they passed a bill actually,
yes,
right? That would show support for the Hong Kong protest, and in particular, the heart of the issue is that Hong Kong currently still enjoys sort of a free trade relationship with the U.S., even though it's part of China.
Yes.
Right, so it's a one country, two systems situation. This bill is about sort of saying that China is interfering and with the free autonomy of Hong Kong to the point of the US think that Hong Kong should no longer enjoy those free trade status.
Yeah.
So this is quite inflammatory. It's been passed, a version of it just been passed in the Senate this morning. The version is different from what's been passed at the House, so the bill will still have to be sent back to the House for them to reconcile the differences, and if they finally have worked out the differences, it will go then to President Trump for veto or for approval.
Yes.
And interestingly, Trump has been mum, very quiet and silent about it. So obviously it does show that he wants a deal. He wants a phase one deal with China. So we're going to watch this situation closely, but not much major movement in the market this morning yet.
No.
I mean, the small down moves, nothing major.
No, and I think we always said it's getting, the time is probably running more out on Trump's side than on China's side, right? Because we're getting into January soon. Like it's, right. It's not that much longer till Christmas, Thanksgiving. There's a lot of holidays coming up.
Oh, precisely right. Actually, the Trump administration is also looking for ways to look at a failed deal they had in the past with China, I think back in May, where they actually can sort of allow some tariff reliefs back to China. So they are doing their best to make something work. Nothing is going to rock the boat yet. Obviously, there's going to be a lot of rhetorics, flip-flop, chest pounding, posturing into the actual negotiations again. But I think the market has learned to read this, so not much movement.
No, but so the market's moving higher. What do you see the basis of that right now? Then, if just because they look more at earnings, look more at economic numbers instead of that, is that kind of what's been happening?
Well, what's amazing about the market is that throughout the beginning of the year to now, we do have a slowdown in growth rates. The US is still growing, growing less. Is not the same as a recession, so that gave solace to the market. The Fed is very clear, on the other hand, that they're going to be on hold for a while, and they also make clear that the hurdle rate for hiking interest rate again is much higher than the other way. So it's sort of an asymmetric posturing by the Fed, covering all the basis.
Yeah.
So I think the market likes that.
Yeah.
So I'm not surprised why things are holding up.
Yeah. Good.
And leading indicators are also pointing that there's some improvement in China. For example, the Likert Index, which actually is a better proxy for tracking Chinese growth.
Yeah.
Because the Chinese numbers tends to be a bit more dubious. But the Likert Index is actually rebounded off from 6%, which is like a big low, to 7.5% in September. So there are a lot of leading signs of stabilization. I think, again, the market likes that.
Yeah, no, thank you. I think that really sums up the kind of like the turmoil. We don't need to go into impeachment. This is all dragging on and on and on. Not much impact right now, right? As we get further notes. But on Monday, quite exciting for StashAway. I think it's like the next step in our growth as a company. But after already having come up with global portfolios, really for your long term to reach them in time. Then introducing Singapore-based income portfolios for people like maybe they already reached a certain asset level, they want to create income. Now we have something called StashAway Simple, so everyone is super excited about it. Reception has been fantastic as well from users and customers. Maybe you want to give us a little bit of an intro. What is it? Kind of like what are the more details about it, and then we have some questions, of course, from customers that come through, right? Yeah.
Well, StashAway Simple, as the name suggests, is simple because there's no conditions attached to earning that yield when you put your money as a cash equivalent with us. So it has no minimum requirement, and there's no limit to the amount of balances that you can park. And there's no terms and conditions such as you must have a credit card with someone, or you must have your payroll processed by someone and leave your money in there for a certain amount of time. There's no asterisk. And by simply putting your money in this particular portfolio, you earn a flat rate, a projected rate of 1.885%. We round it to 1.9. That's a projected rate right now that this portfolio of two interesting funds can achieve today.
And can you a little bit, because people ask like, oh, how do you get up to 1.9% right now when FDs pay this, the government pays this, right, in bonds. Can you maybe give us a little bit of a background of like how you're able to do that?
Yeah, it's true. There's some differences. When you have your fixed D, you have to hold it for 12 months, and you probably earn in the range of 1.3 to 1.4. Fixed D are, however, insured, right? And then when you buy a 1-year treasury bills from Singapore government, you get at the moment in the market maybe around 1.65%, right? So the reason you are able to achieve above those levels is because, first of all, as an institution, StashAway negotiated a more favorable preferential fee rate for the funds that we invested. And two, we also pass back any rebate that we receive from the funds back to our users. So this is actually a free service from StashAway to help clients better manage or flexibly manage their cash balances that's outside their investment activities.
Right. And this is on top of us also not charging a fee on this product at all. Right?
Yes, there's no so it's just more of a good complementary service to our existing suite. So this few reasons sort of reduces the fees dramatically. And in addition, there's two funds in this portfolio. The yield is also coming from how the portfolio is been constructed. Firstly, 50% of the portfolio is parked in a money market fund that has very short maturity of 0.16 years, nearly 2 months, no more than 3. It's a more hold to maturity sort of feature where this fund would own the deposit-like securities, it would own commercial papers from high-quality corporates, and because the maturity is short, they hold it. And actually, that fund currently pays a yield before fee of 1.8. Now, the other 50% of the portfolio is derived from something called the Enhanced Liquidity Fund. This fund is managed very similarly to the money market fund, except for one thing. Its maturity, the maturity of its underlying assets is slightly longer, at 0.8 years. Still, anything less than 1 year are very liquid, they're very low risk, not very sensitive, and it's like treasury bills We have 3-month treasury bills, with 6-month treasury bills. You have 12-month treasury bills. So this is in similar spirit to what the money markets are doing.
Yeah.
Right? So the combination of these two funds created a portfolio with an average maturity of 0.54 years,
yep.
right? And an average yield of 1.885. We rounded to 1.9.
Yep.
In addition, this yield that can be achieved from the underlying holdings of the portfolio is updated weekly.
Yes.
Right? The funds that we use, we get constant, regular updates, and whenever there's a change of more than 0.1 percentage point from the projected target rate of return, we would announce it again. We will notify all our users again. So this is very important because yield projected rate can change slightly here and there if there's a central bank action somewhere in between, or the economic conditions can change as well. This product is best served for people who can park their cash and not be too random about it. So meaning you park your cash in today, you bring it in a few days, and any yield-based product, you are best served by putting it there for at least a couple of months so that you let it compound and accrue. As with our income portfolio, which is the same. Anything that's yield-based, income generating, time is of the essence.
Yeah. And when you mentioned earlier, right, you said an FD has some kind of insurance part of that, which this product does not. Let's talk about the potential risk of this product, right? Because people will ask you, okay, you're getting this much return, what's the risk I'm taking, right? And I know for our other portfolios, we always look at value at risk, right?
That's right.
Some of our users and customers are probably quite aware of how we use it and why we actually always going with risk first and not promising these returns. Can you tell us a little bit about how does the StashAway Simple portfolio fit into our value at risk?
Yes, everything we do at StashAway is a risk-first approach. Every product or portfolios have their respective risk number, and we proceed risk with 99% value at risk. What it means is there's a 1% chance of losing X percent of money, so that is the 99% VAR in this case. Yeah. Just to give you a sense of what the number means, a portfolio of consisting of mostly U.S. government bonds would have a VAR, 99% VAR of 6.5%. It means there's a 1% chance of losing more than 6.5%. This 1% chance is for a very extreme event that happens in the market, something similar to a 2008 situation. Now, the VAR that we have calculated for this portfolio is way lower than 6.5. I'm very pleased to say that it's incredibly low at 1.7 percentage point. And by the way, this number is simulated by our systems only using data from a recession, not on good times. So 1.7% is incredibly low. It's not 0%, but with 0%, you wouldn't get that yield. Yes. With 1.7%, you would get that spread, right? So it's not risk-free, but it is incredibly low risk.
Yeah. Well, thank you, Freddy. I think that really sums up greatly what the product is. Should you have any other questions about StashAway Simple or StashAway in general, as always, feel free to reach out to us. We have a fantastic client engagement team here on hand. You can reach them by phone, WhatsApp, email. You can also find all these contact information on our website. Otherwise, feel free to leave any comments down here below. Fred and I will be back next week together here and happy to address any more. But with that, super excited for the product, great reception already.
There will be more.
There will be more innovations coming in the future, right?
It's part of the roadmap. There's more. Stay tuned.
So we'll do that and wish you all a great day and speak to you next week. Cheers.
Ciao.